Good morning. It is Friday, March 22nd, 2024. I am Mark Sebastian, your only option, and this is Option Pit Live. I'm joined by one Queen of the Candles, the Duchess of Doji, Licia J. Leslie. This is
Good morning.
Good morning. How you doing? Missed you last week.
Very well. How are you?
I'm doing great. Just back in my office after we had a little bathroom accident. Kind of, I'll just leave it at that and let people.
I was just going to say, you may want to explain. You don't want to say bathroom.
All right. Well, good morning, everybody. It as I stated, it is Friday. It's a fun one. Going into today, things are a little bit muted, but the market after an interesting day, because I do want your opinion about yesterday, Licia, but we're down about 8 points pre-market in the S&P futures. NASDAQ futures are down about 0.56%. VIX futures are up a little bit. The bond market, the market is ripped, and the bond market is up a little bit today. It's been an interesting couple of days, and yeah. So, Licia, it's been a week. We had the FOMC come out, and then a weirdly dovish press conference from Jerome Powell, and the statement they still said they're going to have 3 rate cuts. We had the BOJ in, and it looks like they're going to be raising rates, which is interesting. And then we've had a whole swath of earnings, FDX, Micron, and then I want to hit you on Nike and Lululemon as well. Lots of earnings and stuff. What's kind of been your reaction to the week? Because it has been a banger.
It sure has. Personally, I don't know why they're so dovish, but I have to agree with our good old pal, Bill Griffo. The administration would like to keep the Goldilocks scenario alive and well into November. So I'm alongside Griff with that.
I mean, the market's at an all-time high. Clearly, something right's going on.
Yes. And the Fed, I would believe the Fed added to it. Anyway.
Yeah, for sure. All right. So let's talk about what's going on with some of these earnings that happened this week. I think the big winner has to be Micron from the week, and then FDX, FedEx Corporation. They reported earnings last night, and currently it's up 11%. Everything they had a bad quarter in December. This quarter appears to be getting them. It's amazing. On December 20th, the stock dropped and on really bad earnings, and here we are 1 quarter later, and it is going to be trading at a premium to where it was before that last warning.
Yeah.
It's pre-market around $293. I believe that would be a 1-year high. That would not be an all-time high. The all-time high would be in the 320s. But FDX looks really strong this morning.
Sure does. What changed? What did they change in the quarter? Was that just all holiday shopping, or?
Yeah, I think they fixed some cost issues they were having as well. And you look at the reaction there, and UPS did not have great earnings. It's almost like the two of these go back and forth. It's like UPS has bad earnings, FedEx has good ones. FedEx has bad earnings, UPS has good ones. It's almost like they're in competition or something.
Almost.
But heading back to Micron, getting back to chips, Micron is $110. It is at a 5-year high and at an all-time high. And this had been a stock that really had been kind of floundering over the last 12 months. It's still lost money, But last quarter, obviously, they did manage to make some dollars, and the market rewarded them. Pretty strong move. Do you see some more upside here on Micron?
Let me show you my chart. Needs to be extended.
Oh, wow.
Yeah, it's broken out well above my pitchforks. I'm trying to line it up. I didn't get a heads up we'd be talking about Micron, but
It's all right.
intent. Yeah, I think you're gonna have to take a fib retracement on there to figure out the next high. Follows
Wow.
this along pretty well. Let's do a channel. My rule with a breakout gap away like that, huge breakaway gap is what that's called, is that the stock has to stay up there for several sessions to solidify that it's going to stay there, right? And not just completely reverse. You need a few sessions, more evidence that it's strong, it's true, it's real, and then it can possibly trade higher.
All right.
So that's breakaway gaps are hard to trade. I wouldn't trade it immediately off that. I would need more evidence it's going to stay up here. And that would be holding the low of yesterday.
And then some rough earnings out of the specialty retailers. I don't know if you saw Lululemon, LULU.
I did not.
It's down $65 right now.
Holy cow!
It is going to open around $415. Good for about 13%. Oh, it's hitting the bottom of your pitchfork.
It sure is. Look at that. Wow.
These things, pitchforks, for those unaware of pitchforks, you either set a high, low, high, right? And that kind of establishes a range, or a low, high, low, right?
Correct.
But what's the thought process behind the pitchfork and the center line, and what are the 5 different lines that we're looking at?
Well, I don't think it's much different than your
Baldwin bands.
Your Baldwin bands, right? Your standard deviation. The median line is generally pretty important, and the upper and lower rungs. As far as rules, there are no general real rules. You just kind of play with it until it fits your chart, and showing that it stays within the channels and honors those support and resistance levels, which Lulu has really done well here.
Yeah.
The only other rule is that if it doesn't make it, so here it made it all the way to the bottom. If it doesn't make it all the way to the top or the bottom, it generally goes to the opposite end.
Oh, interesting.
So yes. Now, nothing's 100%, as we all know. Doesn't always happen.
No.
But here it's happened in Lulu. Lulu did not quite make it to the very top of the pitchfork, and now today it will be visiting the lowest rung.
And if it breaks the bottom, then you've got to establish a new pitchfork after a couple of days.
Exactly.
All right.
And a lot of times when you want to draw a new one, you can take your highs and lows of the previous pitchfork, depending how far back they go. But all you do is just play with it and see what fits, basically. Kind of just very loose. They work though.
No. All right. So I want to pivot here a little bit and talk the volatility index, the VIX. Because and not specifically VIX, but we got some really big news out of VIX. So the VIX itself, one positive thing that, I know you'd heard me talk about this, and I talked about it, and I talked about it, and I talked about it. And it was the relationship between VIX futures and the cash index. The VIX that everybody reports on TV is just an index. You can't trade it. But VIX futures, you can trade. And the traditional relationship between VIX and VIX futures had been broken since the beginning of the year. That changed a little bit. if you want to share my screen, let me show you what I mean. So the VIX closed at about 1310, and that April future, which has less than a month to go, is trading at a 1.5 point premium. That is a normal number. That's about where it should be. Now, I want to take us back to last month when we were at about the same expiration. And I want to point out, look, this is the, oh, here, that's a bad, let me get a little different data. Here, let's pull this one. There we go. So this is February 27th, a little bit close to expiration, but about the same. And what we were seeing was this relationship. So the cash index was around 13 and 13 and a half, and the VIX future was about 14. So that spread was about half a point. Normally at that point in time, it would have been closer to 1.25, 1.5. So we'd seen the spreads really, really tight. I mean, even the April future at this time last month was trading less than it currently is now. So there's been some pretty interesting, I think, macro bear flags in the market that this thing is getting overheated. But
So
if you're looking for a bull case on why the market could keep going and going and going, it's the renormalization of this curve. And the renormalization of this curve says that your normal models, the type of stuff that you're using on a daily basis to trade, are going to continue to work, which would be generally bullish. Now, we also got a really interesting piece of news around that. And for that, I want to bring Andrew in to talk about this because
I didn't get to talk about my view on the market, Mark.
Oh, I'm
I
sorry.
just completely took over and didn't read what I was going to talk about.
Am I looking at the wrong sheet?
Just real quick, if I may show my, now I know I called SPX to 5,300, but I am getting resistance here on ES and on SPY. They're both at the top of the pitchfork. Now today I would watch for us to take out. Yesterday's low will be support. See my up channel in SPY. We're knocking on the door of the upside of the upper channel, the upper side of the channel. Yesterday's low will be support. I would watch the market. If we take out yesterday's low, see what we do around there, and maybe we have a little pullback. I still say we see 5,300 in the near future, but we may have a little pullback today because the last 2 days were pretty bullish. That's all. I mean, Andrew now.
The price, well, I would say, what were your thoughts on the price action yesterday? Obviously, because that was a little bit toppy feeling when you get that kind of movement.
It was, but then it didn't follow through.
I know.
I was expecting to possibly close a lot of that gap because we gapped up how much, like 20 or 30?
30 points. 30 points.
30, yeah. On my 5-minute, we began to the top of that gap is generally very good support, but then actually the whole gap is support. But I thought maybe we could fall further into the gap yesterday, and we didn't. It held.
Yeah. Yeah. That's interesting. So what do you see in the Qs and IWM? Pretty similar price action or no?
Sure, let me show you. Q's made a new high, but didn't. So they're also at the top of a pitchfork. Made a new high, but it's an ascending pitchfork. Had a reversal day though, right? Not a bullish day, a reversal day. So couldn't quite close above that resistance there and on the pitchfork. So that could be a bearish signal. IWM up against resistance also with a double top. So I think they're all heading maybe a slight pullback. I would watch for it.
Yes. All right. Well, let's and for those of you saying, "Hey, Mark and Licia, why haven't you talked about Apple yet?" Well, we're going to talk Apple here in a little bit. It's going to be our stock of the week, where Licia is judge, jury, and executioner, and Andrew and I argue about a stock. But before we get that, you heard me talk about VIX normalization. You've seen Licia's charts. We also got a bit of piece of news that I think I know it is a massive opportunity. And I'm now sitting here like this until April 22nd. I want to bring Andrew T. Giovinazzi, in to come and talk about this.
How you guys doing?
He is the
Morning,
vicar of
Andrew.
volatility. And Andrew, we caught a big piece of news on in the VIX front with in the ETP space, and it's pretty good news for you, me, and Licia. The rest of the market may not know. Why don't you kind of clue us in on what the big reveal is today?
If they stick with us, they'll know.
I wish we had like a graphic of Smithers from the Simpsons, when he was like, ooh, like. So anyway, UVXY is going to reverse split. I haven't seen the number yet. Is 5-1?
5-1.
5-1.
Mm-hmm.
Like, they can't give us 10-1. They give us 5-1. So anyway, I have a
1
graphic
been
of
nicer.
UVXY up. If I have a graphic of UVXY up. If Max, you want to show it on my screen, but this is a vol product that owns VIX futures. Like Mark said, you can't trade the cash index, but you can trade the futures. This product owns them with some leverage, 1.5 times. It does great when volatility spikes and the futures rip, but most of the time it does what this graph shows, which is go down. You can also see the last time it split, reverse split. And since then it is down from what, $22 to $7, so it's lost 60 something percent of its value or something like that. 70%.
Absolutely. And it will lose that again
eventually. So that is an opportunity that we're going to cover, I guess, at some point, maybe 21st.
Yeah, as we head into it. So the 22nd is a Monday. So we're going to have it. So it's basically the Monday after April expiration.
Yes.
So we're going to have plenty of time to dig in.
Perspective, that's what UVXY can do if we have another pandemic. It can go from, what was this here? $1,000 to 14,000. So it had a huge move, and then it spent the whole time giving everything.
And then it just died. This is one of those where you buy it, you don't buy and hold. You buy for maybe a day or two and get the heck out of Dodge.
Yep.
Because it will kill you. On a day-to-day basis, its price is determined by movement in the VIX. On a week-over-week basis, its price is 100% determined by the term structure of those VIX futures. And actually, the VIX futures normalizing the way I just showed everybody, that is going to really benefit to being short UVXY. So if this curve stays in that normal function, on that reverse split, there is going to be a massive trade. Here's what I will tell you. All right, we'll remind you guys in a couple of weeks, but the Tuesday after it reverse splits, they'll list the options. On that day, I'm going to do a trade. I'm going to do the trade. I'm not going to touch it. And 3 months later, it will be up 100%.
That is the goal.
That is an
excellent goal.
And
it worked the last time too.
It worked the last time, and it'll work this time. So that'll be something we're going to be up and ready to talk about in a couple of weeks. All right, so there's that. So the next piece that I wanted to talk about was the bond market with everybody.
Okay.
Licia, we didn't get your charts on bonds. Andrew, we have not gotten your reaction to the Fed. I don't know if I've even shared my full reaction to the Fed, other than to say they seem dovish. What was your takeaway from the Federal Reserve?
Again, I think they're just holding the line, and they don't want to change. Like, keep the Goldilocks scenario going. They're totally ignoring government spending. They've been ignoring it for 3 years, 4 years.
40 years.
Yeah,
Oh,
I was going
okay.
to say
But
longer.
they're especially ignoring it now, I think. Because now we actually had an inflation reaction and they had to react.
Yeah.
So it was slightly different this time, but you hang it on everybody's head. But right now it's getting, there's no crisis, right? There's no. What's the excuse to spend everything? But anyway, it doesn't matter because, there's growth. The government is creating growth and markets going up. But more important, the market likes what it sees as interest rate stability for a period of time. So if you're trading VIX and you were looking for some crash, you're not going to get it. Pulls the vol in. Now all of a sudden, things look a little more clear, but you're already at all-time high, so we don't have a reason for the melt up because there's no change in interest rate situation. So the melt up kind of is gone, and the downside fear is coming out, and that just gives you kind of a lower vol. Like Licia said, we have a little pullback rally, but ultimately, I think the trend is still up.
I agree. I was interested in the fact that while VIX itself was dropping, skew is going up. Skew is the cost of out of the money options as opposed to at the money, and we saw a pretty decent sized bid start to develop for options that were call them within reason, but relatively inexpensive. So for SPY options, think options that have a couple of weeks to go but are worth about $1. Right? You buy an option for $1, it's not completely unreasonable that it can end up in the money, right? You buy an option for 10 cents in SPY, kind of a different story.
Right.
So options that were $1, $1.12, $1.12, $1.20, $1.50, we saw a bid on those options. Whereas kind of the at the money options, the $6, $7, $8 options, that's where the pressure was on volatility. Speaking of pressure, Licia, did you want to? I wanted to look at your charts for bonds before I
Sure.
switch to giving
10
you the
year.
gavel.
10-year up against resistance, but turning positive. Looks like it wants to break above that resistance. That's the 10-year. Same idea on TLT. Up against resistance, but kind of coiling and trying to gather the steam to break out above it. The dollar's gotten stronger too.
The dollar has?
Yes.
Oh, wow.
The dollar's breaking out. Trying to break out above some resistance.
It's interesting.
Here,
the market is at all-time high and the dollar is getting stronger. That's a little unusual. What is going to break the market? People are like, the market's got to drop. The market's got to drop. The market can go on and on and on. But if the market breaks, it'll eventually be interest rates. And it's always interest rates. It's always interest rates and borrowing, right? Even you go to the dot-com bubble, what really broke things was, these companies weren't making money, but all the borrowing costs and all the free money from the internet that people had loaned them at terrible rates kind of blew up the market. And blew up that entire space and made capital unavailable. Speaking of capital, a company got a tap on the shoulder from our nation's capital in the name of the DOJ, and the Department of Justice said Apple is engaging in antitrust practices, and obviously Apple, which had already been selling off, but it had looked like it was really starting to recover and wanted to make a run higher. Money was kind of moving back into it. It got absolutely thwacked. So for right now, our stock of the week, we're going to look at Apple. Licia, let's swap me and Andrew, or excuse me, Licia and Andrew, because Licia's now judge, jury, and executioner.
I don't like my face big though.
No, this way we can see
it can be avoided.
This way we can see those cool sleeves. I like the look at that. I like the color combo. All right. So Andrew, you want to be a bull or you want to be a bear?
I had to say, well, I have my whole sort of trading vehicle set up bearish, so I gotta go bearish.
right.
I've been, and
So
I
we
was
won't-
like
we-
2 weeks ago. So
All right. So we got 30. So Andrew, I'll let you go first. 30 seconds. Have at it.
yeah, usually historically DOJ says I'm gonna put you in antitrust cuffs. The stock acts poorly for a short period of time because it puts a lid on it. So that's basically it. And I also think Apple's going under margin compression. So it's just for a stock that was leading, it is no longer leading. And that's if it ain't going up, it's going down right now. So in an all-time high market, it should be doing better, and it's not. And that's the number one for me.
All right. Apple was behind in the AI. They got rid of the car. The DOJ is going after them, but we all know the DOJ is a lion with no teeth. And Apple will cut some. Word will leak pretty quickly that the DOJ is looking to cut a sweetheart deal, and the stock will be trading back over 180, probably 190 within a couple of weeks, maybe a couple of months, because there'll be a market rotation out of some of these chip names back into Apple. You might see a Microsoft Apple trade. It just, I mean, on the DOJ news, it couldn't even break the lows from the week of the 11th.
Right.
I think you use this news as a opportunity to jump in and trade it back to trade it back up toward 185, and then maybe make a decision. So I agree with everything you said, and Apple's still going to go up. Licia?
Excellent rebuttal. Well,
I will show you on the charts. I think it may have to test this previous low right here. Just made just this past couple of weeks. 168.75. I think it needs to test that, and maybe even possibly 166 3/4. And then I think you're right, Mark. I think, and then it could gather some steam and come back. But I think it's going to, this is pretty bearish. Yesterday was very bearish. I think it needs to have a little more follow through, wallow a little, and then people will be like, okay, time to buy it.
Yep. So there you go. Licia rules in my favor.
Well, first Andrew, then Mark.
Speaking of first Andrews, there are many firsts out there. There's your first steps, your first loose tooth. But if you haven't had your first ride in Andrew's trading vehicle, you're missing out, because it is quite a ride. If you've caught a ride before, welcome back. If this is your first ride in Andrew's trading vehicle, this is going to be more exciting than your first ride on an airplane. Licia and I are going to go in the background, and Andrew's going to walk you through his trading approach and how he views things. And he's looking at Apple and I believe Chewy today. So take it away, Andrew T. Giovinazzi.
So this is 5 minutes with the vehicle. You could show my ugly screen here, Max, if you want. So Chewy, I was right but wrong. A couple, I don't know, maybe early in January, December. It's hard to remember. We did get the rally, which was cool, but it would come all the way back again. And I would say Chewy is a stock I want to own. I do own some. And I'm looking to buy more, but at this point, it's not a call buying stock in my view. I'm just selling puts. And if I take delivery on some more, but I'm only selling puts for another 500 shares. And then I'm done as far as how much I want to buy for myself personally. So now I am in the put selling mode. There were good opportunities to, I did trade the 1x2 calls spreads well. I made some money there, but now I'm just accumulating more shares. So anyway, that's my current for Chewy. So again, it's an investment. So I'm looking to accumulate shares at lower prices. So right now it's about as low as it's been. So we'll see what happens. They have revenue growth, just not as fast as the market wants. So the market kind of sold it off yesterday. The second part is Apple. So when I'm looking at Apple, I'm trying to decide how fast I think Apple goes down. So part of the discussion, especially when Licia was talking about the chart, it looks weak, is when I want to choose a put versus a put calendar. And the idea really is, now you could see Apple, it could go down. I think it's going to go down or just mostly trade soft. So the difference is if you think a stock is going straight down like 10%, you want to buy a put. If you think the stock is going to trade weekly and just kind of vacillate, which is what I think Apple's going to do, I like the idea of a put calendar better. So a put calendar is going to look like this. The P&L of a put calendar looks like this. So let's say Apple is trading here and you strike your put calendar below the market because you think we're going to go to the strike. And the P&L of the graph looks something like, this, where you have you make your most money at the strike of the calendar you pick, and then the stock goes down to that strike. If I'm buying a put, right, I'm starting off with a debit here, similar to a put calendar, but then all of a sudden, the stock just has to go straight down. The difference here is how these trades react if Apple just kind of sits and does this, goes a little up, goes a little down, and trades just poorly. So puts have negative time decay. So as soon as you buy the put, especially if it's close to the money or just a little out of the money, you need action immediately or your put's going to start decaying and losing money. A put calendar does want the underlying to go to the strike that you pick, which is below the market in the case of a put calendar, but you get paid positive decay normally for the most part if you buy the calendar well. That's a whole nother subject. The difference also is when you buy puts, you're looking for a home run fast. When you buy put calendars, you're not looking for a home run until after the short term expires. So again, it's difference in velocity. Puts, heavy velocity in one direction, put calendars, just kind of doing this. Again, lastly, in my view, you want to place your puts closer to the money to get performance. If we fall apart, put calendars, you place the calendar where you target the stock. So if I think we're going to trade down to Licia's level, I was looking at 165 put calendars as the best target for this. Also gives me a little bit of a market short against some of the other longs that I have. So it kind of fits what I'm doing. It's also giving me, it's going to act kind of like a long gamma trade, even though it's a short gamma trade, meaning that there is some point, according to my little drawing here, where is here, right? I got my little drawing here. At some point, it doesn't look so good. It will go outside of the tent essentially, and then all of a sudden my put calendar is not making any money anymore. So normally when you get to the strike, that's when I just close the calendar. I don't even think about it anymore because that essentially is your max bucks. So for me, I'm looking at put calendars in Apple right now because of the way I think Apple is going to perform in the short term. And that is my trading vehicle for today, Apple put calendars. Oh, and last week we did a SPY strangle versus an iron condor, and we picked the SPY strangle, and we bought a bunch of strangles and option pit and all our products, and it was a good week. So the strangle over the iron condor was a win. I would be switching, looking at iron condors actually now in the SPY over the straddle. That's just, again, that's a recap from last week. So if you looked at strangles, you did well. If you had sold iron condors, you probably got run through. And that is my vehicle for today. I'm done driving, Mark. You can
ride.
I can take the wheel.
Absolutely. We've got a good question from the audience for Licia. They're asking, Licia, what time frame do you typically use for pitchforks? Thanks.
Hi, Andrew C. I set my pitchfork up on the dailies, but as you can see, so here's Apple on the daily. Follows along very well. But the pitchfork will work, obviously, because it's the same prices, right? But you punch in the weekly, you get a different view. Kind of like on the weekly now, you can see a double top there pretty clearly, right? And here's that support level, the previous low. That's the weekly. Here's the monthly. So I draw them in on the daily, but they obviously work for, I shouldn't say obviously, they work for any time frame. Now you go out to hourly and all that, it's going to just be.
That's aggressive.
It's too wide. Yeah. So I draw them on the daily, and it's actually smart to look at what it looks like on the weekly and monthly, because you might get a little bit of a different picture, or you may see it more clearly, right? Less noise.
Absolutely. So you use the daily, but it's good to go and look back at the weekly for longer trends.
Yep.
All right. Michael says, Powell has a speech this morning. That's a good enough reason to pull back before setting a weekly high. You know, I can't argue with you, Michael. I can't argue with you. All right. You know, I wanted to go through a little piece of order flow that I thought was interesting, and because I want your guys' opinion here too. This really, I mean, this is some of the more aggressive paper I've seen in JP Morgan in a while. On a trader that was right, and it has me worrying, wondering how high JPM can go. If you want to take a look at my screen here, I'll cut this so that everyone can see it. I want to make this nice and big and easy to see, because this is a big piece of paper, folks. All right, so this is in JP Morgan. The customer was long 13,000 of the 190-210 call spreads, sold them at $9, 13,000 times.
Nice.
13,000 times. Look at this. They rolled to the May 200-220 call spread. They didn't just roll. They paid $4.90. They didn't just roll. They levered. They increased their size by 50%. So they pocketed a little bit of cash because they took in $9, but they spent $7.50 of that to go long. So they levered up the position to go long the 220 to the 200-220 call spread. JP Morgan, you know, we keep talking about AI. JP Morgan has been a juggernaut over the last, I mean, look at this chart. I mean, it bottomed in October, and has it had a down day? It's had one. You know, this thing has gone. In October, it was $135. It's now $200. JP Morgan is up over 50%.
Just since
Since October, since 5 months.
Wow, that's
if you were able to
do that.
If you're able to trade and break the rules and do whatever you want, you'd be up that much too.
Well, I think some of the stuff that was keeping banks down, you know, treasuries on the balance sheet, all these kind of problems, their assets going to zero. I mean, up to now, I haven't seen it materialize anywhere. So,
I mean,
they're starting to give JP Morgan a little bit of a multiple now too.
Well, I feel like every time a mid-cap bank goes under, JP Morgan goes up. Because, well, you know, folks, one thing to remember is JP Morgan's so big, they're too big to fail. And so they can absorb an asset like New York Community Bank or a Silicon Valley Bank, and they basically get all the upside when that thing goes kablooey.
Yep.
And they don't eat the downside. So, I mean, I guess the strategy is wait for a mid-cap bank to go under and then buy as much JP Morgan as you can and sit back for a couple of weeks.
There you go, a new strategy.
I mean, JP Morgan's been a good investment as long as Jamie Dimon's running the show.
Yes.
As soon as he's replaced by some who knows what, I don't know. I think all the brains go with him, but that's
He's a smart guy.
But for right
Licia,
now, I wouldn't get in the way of it for sure.
Licia, what are you seeing in a JP Morgan chart? I know I just threw this at you.
For some reason, I like Jamie Dimon. It drives me nuts that these, they're cheaters and all that, but I do like Jamie Dimon. Don't ask me why.
He's
but,
like, he just
like a velvet hammer or something.
The velvet hammer. That's a good way of putting it.
Right? There's something about him that you just kind of like, I don't know.
He's got a bit of a folksy feel to him, actually,
Yeah.
despite being like Mr. New York finance guy. He's a little less dismissive maybe of regular people, even though his bank acts entirely the opposite of that. And what he says and what his bank does are two different
on
things.
the SIBO? Ed, didn't we call Ed the Velvet Hammer?
Yes, we did. We did. Ed Kelly.
Oh,
I had to, it's broken out and I created a new pitchfork, and look how well it followed along that channel, tested the low of it, and now it's breaking out. So yeah, I think your call spread buyer, you go out here, this is 203. Now I got to go way up here though to get to 220. That's 213.
yeah.
So maybe he's looking at earnings over here, 216.
I mean, he's got the Trader's got till May, so interesting play. I thought that was the most interesting paper I've seen all week. Really, I thought it was really fascinating. Oh, look at
it. It's hard to. Well, I don't, at this point with this market, there's no sense in getting in the way of anything that's moving up. So
I agree.
Speaking of this market, it is 9:14. We got about a minute left before the show. And let's catch people up on futures. S&P futures have rallied while we've been talking. We're down about 2.5. Bond market's still up. The Nasdaq's recovered a little bit. It's down about 18. What are you thinking for the day, Andrew?
This is a tough one. But on these weeks where we've had pretty good weeks, we end up usually on the end of the day on Friday up. So I think we have our little brush back in the morning, and we have, maybe end the day up 25 basis point, 25, quarter of 1%, something like that. Nothing blockbustery. Post Powell saying whatever he's going to say.
Licia, what do you got today?
I still say watch for a little bit of a pullback. It may not last throughout the day. I say we get that little pullback and maybe a little more. And if not, another little spinning top. I don't think we do a whole ton.
I think we could get some softness next week. I think that here's what I think would be the classic play out. We're kind of down all day. They're kind of slowly pushing. We're down, call it 0.4% at some point. So, and then right around through 2:30, buyers come in, kind of slowly buy it. We end the day near unch. They managed to push it just positive on the day, to up 0.1%. That's something along those lines. That's the feel I get for the price action that we could get today. But
that's a pretty specific scenario.
I was about to say.
I'm just telling you, that's what I see happening.
I got to pencil it down in my leisure. That one.
Yeah.
Okay,
if I'm wrong, then I think if I'm wrong, I lean Licia's way though. We'll see some money come off the table and not want to deal with weekend risk. But I've just seen us. I've seen us just kind of get this like slow selling throughout most of the day. Pushing us on average, a point, 2 points lower an hour, and then some Yahoo around 2:30 in the afternoon comes in and buy it. So keep an eye out for that. But and very specific. But if I am right, folks, I'm expecting all of you to tell everybody in chat next week.
Next Friday is going to be insufferable. It'll be insufferable.
All right, everybody. I want to thank you for joining us here at Option Pit Live. Andrew, thanks for stopping in as always.
Yep.
Licia, Queen of the Candles, thank you so much. I love co-hosting with you. And so for
Been a pleasure.
the Vicar of Volatility, Andrew T. Giovinazzi, and the Queen of the Candles, the Duchess of Doge, Licia J. Leslie, I'm Mark Sebastian, your only option. Have a good one.
Bye-bye all.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be a financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.